It's Liberation Day in the United States. We're finally going to be freed of the chains of tyranny in this country that is the freest in the world. I don't really know what Liberation Day means. I don't know what we're being liberated from, but apparently it means that we're going to drop a tsunami of tariffs on friends, enemies, and everybody in between. Markets are holding their breath, waiting to see what will happen. In the meantime, I have one of my favorite classic guests. It's been a long time, Stephen Stonberg, here to talk about everything happening in the market, but also some surprise things that maybe you guys haven't heard about. We're going to dive into that right now. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit that like button. I'm going to bring on Stephen right now. Good morning. It's been a very long while.
Yes, I've been busy building the next project. Now
I think last we spoke, you were the CEO of Bittrex, so it's been a while, obviously. And happy Liberation Day to you.
Thank you.
Yeah.
It's exciting, but I'm doing insurance now, which isn't quite so exciting. But hopefully your listeners will be bored. You know what? There's so much going on. I read the headlines at the end of the day. I'm too busy to follow everything he does.
Yeah. Well, before we jump into what you have been busy with, I think it's worth discussing Trump tariff plans are being ironed out and they're due today. It's interesting as you sort of watch them deliberate on this. It seems like they don't even know what they're going to do today yet. To be quite honest.
That's the perception they want you to have. I think it's more, we all sort of speculate. I think it might be sort of more orchestrated chaos for some desired effect.
I'm quite sure that's exactly true as a bargaining tactic. When I look at this, my natural gut says whatever happens should be somewhat priced in because it has been so chaotic. What could they possibly announce that would be so dramatic that the market would react in either direction?
I agree. I think it's hype on both sides. I mean, I think there's the negotiating of the people who are going to be tariffed who have had an unfair advantage, perhaps, and it's like me taken away. It's like any classic negotiation. I think it's recency bias. People think the world should be like it was recently, and this is more like 1880s or 1890s. So nobody remembers this, but I mean, this is like mercantilism. And if you studied economics, the world has operated this way, just not in anyone's lifetime that we remember.
It's interesting. Yesterday, China announced already that they were going to stop allowing or restrict allowing Chinese from investing in the United States, and Chinese investment in the United States is obviously huge. So it seems like they're getting ahead of what's coming to some degree. But sort of as we alluded to, all of that can change in 24 hours at any given time. Whatever he says, they'll respond. He'll respond another way. So it's great theater, in my opinion.
It's like a full-time job if you want to follow it. Some of it, we all have to kind of like work. So I think we need to know what's going on. But you read at the end of the day and you get the headlines and move on.
Yeah, I mean, crypto traders brace for Trump's Liberation Day tariffs amid forgotten strategic Bitcoin reserve developments. It's pretty crazy, I have to say, that all we talked about for 6 to 9 months was this impending strategic Bitcoin reserve. We finally got exactly what we wanted, or maybe some version of it with an executive order. Nothing happened.
Exactly. No, it's fascinating what's going on.
Okay, well, let's dive into what you're doing now because I find this so important and something I've often talked about as sort of the missing Lego in the stack here for crypto. So former Bittrex execs, that's you, raised $40 million in Bitcoin to back Barbados licensed insurance firm. Barbados regulator Tabit Insurance raised a $40 million insurance facility funded entirely by Bitcoin. One of the biggest problems we have in this industry. Now, listen, I think the libertarian self-custody people will tell you your keys, your coins, your responsibility.
But you can keep your key with us, so I can talk about this. So I think. So let's dive into what
you're doing because I find it fascinating.
I mean, this is a lot. So I think, look, insurance, first of all, people glaze over. And I'm not, my background was I guess within TradFi, it was capital markets and banking. I guess that's like one kind of cabal. And then you have
Brevin Howard or something as well. So
yes, and like big banks like Goldman and Deutsche and JP Morgan. And then, but I moved into crypto. I was employee 90 at Binance. So in 2017, and then I worked with CZ, great guy. I think they built something incredible. I just thought their tolerance for maybe regulatory risk was a bit higher than mine. And I decided to, I have a lot of respect, but I'm an American. I've worked in regulated things. I didn't have the risk appetite, shall we
You had
say.
to
So
protect your own ass. Well, that's like
no comment. But I went to, I'd already known Bill and the Bittrex team. It was, and when I joined CZ, it was interesting. But no one. It was very early. Like he aspired to be Bittrex, but then it like surpassed it very quickly. But I think depending on one's interpretation of regulations at the time, that affected a growth trajectory. And I just so Bittrex was smaller, and it was still like very respected in one of the top exchanges. I left 3 months before FTX to work on this project. I look omniscient, but yeah, it just was interesting timing. And we can talk about. I was already thinking like it's time to do the next sort of convergence play. So anyway, so I think insurance is this big untouched thing, even in like take away crypto, and then when you add crypto in, then you've already lost like 90% of people, because it's the intersection of like capital markets, banking, insurance, and crypto. So you have to know sort of all three. So anyway, that's kind of what we're trying to humbly attempt to do here. And it's taken a long time to find a regulator. I'm working, my partner is Bill Shahara, who is one of the 3 Bittrex co-founders. And this is sort of what we view as like the next big ecosystem to disrupt. And this is just the first kind of commercial step that we think makes sense to sort of attack it, if that gives you kind of our entree. And then we can dive into what we're doing here.
Well, yeah, I'm just interested as to how this actually functions, right? This market has obviously lacked protections, and I'm assuming that one of the major impediments to institutions and governments and sovereign wealth, everyone else coming in, is what happens if we blow it? If I hit the wrong button, or if we get hacked or something, how can this possibly be insured?
Yeah, and insurers are like, they're hard. They're way more. So again, take crypto out of it for a second. Like the capital markets, the bankers, they tend to be more, the aggressive ones. It's higher paying. That attracts more the best and brightest. Insurance is kind of, unless you're Warren Buffett or guys who have bought these and run them like financial plays, less, not so much just to run them. For insurance, it's like a steadier, stable career path, but it's low risk by definition, and it's fragmented. It's regulated by jurisdiction. You have insurance, you have reinsurance. So I think when you step back to like 2013, like what has blockchain done for banking? And you sort of knew the applications, but they created this whole new set of assets that these crypto exchanges. Well, what is that? There's already a stock exchange. So you have a parallel set of infrastructure, but there was a parallel set of assets. In insurance, you don't have that. You have all the same problems. It's backward. You balance sheet, what assets can you put on, the way they settle trades, nothing's on the blockchain. It's all paper. And that's how they want to do it. So I think it's ripe for innovation, but you have to you can't do it all at once. You have to say, okay, where can I start and make money? And then hopefully you aspire to do what's happened to kind of the banking sector. And that's kind of our pragmatic approach. So, I think there's 2 things on an insurer. Again, let's put crypto aside. There's the insurers. Who are you insuring? Is it a person? Like, is it you for your house, your car? That's insurance if we do it directly. Reinsurance is when you do a big lumpy trade and I insure another insurer who then just does like a CDO of insurance, and they just want to get rid of like a whole big portfolio. And that's reinsurance. And that's the 2 like high level products. And that's all done in dollars on paper. And that's institutional product, right? And then you have separately like the balance sheet of the insurer, like the regulatory capital. Like a bank has to put up capital, and then you have to have reserves like that you hold. So those are your kind of like the basic model. So I think a lot of people have looked at the insureds like, I'm going to be a crypto insurer because I insure you, Scott, because you're touching crypto, and it's like this banking problem. You're automatically a criminal, like you're debank, you can't get insurance, and now you're regulated because they have all these lovely digital assets licenses. But nobody will insure you because the insurers don't want to touch. They don't understand it. Like there's just blanket crypto exclusions. You have to have boring things like directors and officers. And you have to have it now. Like you didn't have to before. So you can't even buy it. So like that's one way of innovating, but that's still all done in dollars. There's nothing innovative on a piece of paper through a broker. So that's crypto insurance. But then there's the balance sheet of the insurer. Like even the companies doing that, they hold dollars. There's nothing innovative. We actually wanted to innovate the balance sheet and put Bitcoin on it, maybe other tokens, and then you're solving 2 problems: a capital constrained industry, new source of capital, Bitcoin alone, 1.7 trillion sitting there doing nothing, and we also wanted to create a use case for Bitcoin. And that's all we wanted to do. Obviously, there's tons to innovate, but you have to walk before you run. So that's the problem we've been going after, and that's what we're trying to solve to start with Tabit.
And quietly, there's another problem coming from the EU that you alerted me to that this actually solves. But EU watchdog wants insurers crypto holdings 100% covered, citing volatility. So this is blasting us back to the Stone Ages. This is in Europe, of course, but the pre-SAB 121 days, if you have crypto, it's a liability, and you need to have an asset on the other side of the balance sheet, and all these crazy rules.
Which is insane. Mercifully, we're not in the EU. So we're so the EU. So the way that, again, insurance, banks have the BIS, the Bank of International Settlements, and these Basel rules, and like that defines how they have to hold capital. So a bank can hold crypto, if it's holding it as a custodian, it's your crypto. If it's holding it on its balance sheet, it's heavily risk weighted. So banks already are inefficient places. Insurers, it wasn't an inefficient. No, I mean, there's very few insurers that even have it on their balance sheet. So they're just sort of front running this and saying, hey, now that BlackRock is doing ETFs, like, don't you think you're going to go do this on your balance sheet? Which is fascinating. So they're not even doing it, but they're basically telling them, don't even try. Like, you're going to get mad, which is insane. Because like, why would they? They can hold real estate, they can hold stocks, they can already hold all this weird stuff and not have punitive capital charges like a bank. But you're basically telling them that an asset like Bitcoin that's more liquid is going to be a punitive. So it's really interesting to see that.
So when you do take it, the mechanics, I'm assuming it's at a tremendous discount, right? For you to have it on the balance sheet, you can't value it at 100%. A Bitcoin's not $85,000 in dollars.
No, so they basically for insurance 101, like I said, they call them the solvency rules. So there's solvency 2. That's what European Union insurance and reinsurance firms have to abide by. Interestingly, Bermuda, which is offshore, opted into solvency 2. So I think this might apply to this. Sort of will apply to them. You chose to be under EU rules. Like, mercifully, Barbados came in. The United States used Solvency 1, so this doesn't apply to the United States, which seems to be. So I think you're going to see already a big schism between a growing schism between the U.S., which is now going so pro crypto under Trump, versus the EU, which was, I thought, more proactive pro crypto versus like the previous regime. Now it seems to be going everything changes.
But now you think when you think about that in the past, and obviously, like, you were at Binance and Bittrex, so I've spoken.
It was all offshore because you couldn't do it in the US. Like, it didn't make sense.
But even when Mika was happening, there was this fake cautious optimism that was like, any clarity is better than no clarity, even if it's bad, right?
Yes,
and so they were making these rules of the road, and we were like, at least we're getting something. We know what we can do in the EU, but now when all these things are enacted, we're seeing what's actually happening, right?
Yep.
And this isn't, I don't know if this insurance part is part of Mika at all. But
no, that's all Mika. Yeah. I mean, it's different rules. They have Mika's
yesterday Binance removed USDT from the European exchanges, right? Yeah. Because of Mika. And we've had Palo Arduino from Tether come out and say the biggest risk to Tether is Mika rules that require us to put our backing, our dollars and euros, into fractional reserve banks in Europe, right? And there's limits on how much.
That's also assuming they'll give you a bank account. That's like, will they even take you as a client? Like, you can't make them.
I think it's a cautionary tale, right? Because we're looking at stablecoin legislation in the United States. By the way, it was kind of just breaking this morning that Congress and the senators are basically holding the line on yield-bearing stablecoins, which the industry wants. We have this industry battle, but that's one of those things where if they're earning a yield on it, you would think the customer could get it. We're probably not going to get that. But here's the cautionary tale, is that we're cheering for legislation. We're in a great legislative environment, but there could be a lot of unintended consequences to the way they structure it because they don't understand necessarily exactly what they're doing.
That's the whole thing. So they mean well, but they actually, the law of unintended consequences, and they just, the market reacts. But it's interesting. So anyway, that was just very timely, I thought, since we were speaking. That came out Friday. So that hasn't passed yet, but it just shows you that's kind of draconian on insurance if that happens in Europe, not for us. I guess it's better for us because we're out of it, so it makes it worse for them. But so we talked to the three major insurance captive jurisdictions, they're called, like in the Caribbean, and they're the biggest in the world. It's like Bermuda, Cayman, and Barbados. And we Barbados is less well known in the US, but they have like hundreds of captives there. So it's not like we chose the Seychelles. We want to be regulated. It's like a proper, I just came back last week from their big, insurance conference with the regulator. So
Was it on the beach?
No, unfortunately, no. Everyone jokes like I never see the beach. Like my co-founder, he likes that a bit more. I don't have time. I'm not there to go to the beach. Go to another beach, but I'm there to work. But the we approach the regulator again. We just try to keep it really simple. Like we're doing nothing innovative in insurance. On the insurance side of the company, we want to innovate the balance sheet. So on insurers, you can already hold like an asset liability mismatch. Like everything's in dollars, but you don't have to always hold dollar reg cap. Like you can have real estate, you can have stocks, they give you a haircut. So this is not a new concept for this industry. But we were like, okay, well, Bitcoin, let's just start with that. The biggest, the most liquid, the easiest to understand. Now, very institutionalized. I've been watching some of your show episodes. Like it's sovereign wealth asset. It's on BlackRock's balance sheet. Like it can't get more vanilla now for crypto.
No,
so that's why we started with Bitcoin.
Yeah, when you've got the president talking about strategic reserve, you got the president's son's mining
his
Bitcoin.
own meme coin and his wife.
Yeah. So why is this even a question mark in any other industry at this
point?
It's
more liquid.
I can get why they're not going to allow you to put Blanc on the balance sheet or Shiba Inu, right? But Bitcoin, as Michael Saylor has often said, it's the most pristine collateral there is.
But it's on the blockchain. Well, guess what? Every stock is now getting tokenized. So everything is going on the blockchain because those are inefficient settlement systems, the old ones. So what does that mean? So when everything's tokenized, does that mean if you won't touch crypto, you'll have no clients because there'll be nothing that's not, what is crypto? If it's on the blockchain, like how do you define that? Like, what does that mean? So people don't even understand, they just have this
ignorance.
Fear with exactly. It's unfortunate. A lot of education. It's shocking how it's 2025 and we're in 2016. Like people haven't moved on. But at any rate, we went to the regulator. It was again. And we talked to multiple regulators. This is a very easy chat. So you already do this for other assets. This one's more liquid. Can we do the same thing? Give it a haircut. Call it dollars. There'll be margin call, and you're collateralized. So we got them to agree to a 50% haircut on Bitcoin, which is the market for lending right now. Like if you want to do a loan against your Bitcoin, they make you collateralize it like that. So, that's very conservative. So on our balance sheet, which it counts in cash, let's say that we put in $100 worth of Bitcoin. We get to count $50 as if we have $50 in cash regulatory capital. In insurance, you get what's called insurance leverage. You can write, like a multiple of that in terms of how much premium, and then you just go off and do what you're licensed to do, and you were in a real jurisdiction. Obviously, from a credit standpoint, we're holding twice as much cash value as we need. So we're actually massively over collateralized, right? And so we're actually safer than a normal insurer. And by the way, we're the first ones, I think, globally where all of our reg cap is held in Bitcoin. It's all in the blockchain. Guess who has a login to our Fireblocks vault for view-only access? Our regulator, our insurance manager. So you have the first insurance company where all of it's all there. And there have been cases in other jurisdictions where there's fraud, like if the reserves aren't there. If it's cash, you report it every quarter. So that's not possible here. So not only is it over collateralized, it's like totally transparent. So I think that's where we're innovating the balance sheet, not the other side yet, because you can't attack it all. So keep it simple. So that's what we've done.
So we're talking about stable coins, obviously, and one of the biggest pieces of news yesterday that was lost in the Liberation Day madness is that stablecoin issuer Circle files for IPO showing revenue gain. So for anyone who remembers, they kind of tried this in the past through a SPAC or a reverse merger or something, and it wasn't happening with Gensler and Biden, obviously, much like we had no IPOs basically in any industry under that administration. But what I found so interesting about this is guess who's leading the IPO? Scroll way down. Crypto lovers. I'll just tell you, JP Morgan.
Yeah.
It's
JP Morgan. Yes. But the irony of that is even when it was peak, like Jamie Dunn, I hate crypto. Like the London office of JP Morgan was one of the largest, which I'm sure he had to be aware of that. So the official party line, because I have to not piss off whoever was running the government at that point. So it's smart. He's not going to piss them off. But the entire London office of JP, they were one of the biggest whales in the crypto industry. So I just think that there's what they say, and it's all very political. And then there's actually, markets are very commercial, including, him. He wants to make money, so I think he has shareholders to be accountable to. So I think it's a tricky dance they all have to do. So, but I think always sort of they tell you one thing, always do your homework and see what they're really doing.
Yeah, but I think the situation now is that we're going to see an absolute onslaught of companies going public in the United States, which
Which is fantastic.
which will unlock more exposure for institutions and all of these things. What you're doing, I mean, it all speaks to more ways that the big wall of money is going to find exposure to this industry.
Well, what's interesting when you talk, I was looking at, with relevant to Circle's IPO, Bill and I were looking at their balance sheet, and like a lot of crypto companies, they're sitting on a massive balance sheet of tokens. And so, but those tokens, remember, most of what do you do with your Bitcoin? You hold it, it's gold. Like you actually pay to store it. So you lose money. It's like a negative carry trade, like gold. You pay for storage, it doesn't give you a return. Now, you don't think about how can I make money off my gold? Like, well, you can think that way about Bitcoin. What you can do a few things with it. They amount to unsecured lending, where you're effectively lending it, meaning it can be rehypothecated. You're taking full counterparty risk on, to earn 3%, maybe 6%. So remember, if there's like an FTX type event or a 2008 type event, like whoever you've given it to can go out of business, like meaning you could lose it all. So is that a good trade? Like, what do you think Bitcoin is at 100 or 80 and it's going up to $1 million? You want the capital gain. Like, is it a good trade? I can earn 3% and lose all of it. That's probably a really bad trade. I don't think people think these things through. So, I mean, the institutions know not to. So it does nothing. It doesn't generate a yield. So ironically, although we've solved a problem for insurers, right, bringing new capital in, we've also solved the problem for the capital holder, because in our setup, where you put the Bitcoin into this regulated insurance company, right, it's actually regulated. You get your own segregated cell, it's called, like it's like a managed account, just no commingling of your assets. We're not allowed to rehypothecate your assets. They never leave our balance sheet. You get the exact same Bitcoin back. You're long the capital gain. There's no step up in basis, because that's insurance companies are just tax efficient. That's nothing to do with crypto. This is like an old 1960s technology. Like, we didn't invent this, we just adapted it. And then you can generate, by doing boring insurance on the other side, US dollars come in and build up, and it's all done under insurance accounting. So it's like we call it a reinsurance overlay. We can generate cash, and this is a boring trade in itself that's pitched to dollar holders, like right now, for their portfolios. So we're just giving you access to this. It's tax efficient, and you're long your Bitcoin, and it's regulated. It's one of the few regulated, no counterparty use cases for Bitcoin. So we're obviously going to be talking to a lot of crypto holders, like, you're doing nothing with your Bitcoin, which you like. Here's a safe way to earn some yield on some of it. And you can also insure yourself if you wish. Like, you can solve a bunch of problems on the other side. So that's how we're thinking about this, and just trying to baby steps innovate the balance sheet and help holders of crypto.
I mean, it's sort of a last topic before I let you go. Zooming out, we have this title, Tariff Tsunami Incoming. Will Bitcoin boom or bust? I think what's interesting about that isn't what's going to happen with the price action, but how inextricably tied we now are to A, macro, and B, Trump as an industry. I mean, does that surprise, concern, anything? I mean, it's literally like now our assets move based on whatever he says on Truth Social on any given day. It's never supposed to be that way.
Well, I think, I think the whole world's moving this way. I think so. It's not, is it the Trump effect, or is it just how we are as a global society communicating? He's just, doing it much better than other politicians. I think it is interesting. And it was, in fact, as I was walking, it's all very exciting. I do like my morning dog walk, and I was thinking, well, what happens if he doesn't win? And you just don't know what's going to happen. And
in 2 years, Elizabeth Warren could be the chair of the Senate Financial Committee.
No, I mean, like,
she's the ranking member from the Democrats. If they lose the Senate, she's in charge.
Yeah, so it's fun. It's you actually, everyone's like, bring your things on shore and do it all on shore. But is that the right? So I mean, it's sort of interesting. I think you raised a very good point. I mean, it's fascinating what he's doing. Obviously, I think anyone in the industry, it's positive for our industry. But you also have to think, going back to the Jamie Dimon comment. Well, what happens if you hope for the best, prepare for the worst? Perhaps one still has to assume we could go back to a less benign. So you have to it's very tricky navigating. But I don't think that's crypto. I think that's just life. You have to put that into account. But obviously our industry is much more in sort of regulatory crosshairs and gets a lot of attention.
Awesome. Well, I love what you're building and can't wait to see what comes of it. this industry desperately needs it.
Yes, and the insurance, it's just, I mean, it's a great industry, but it is so, they don't like innovation, period. Like,
Weird.
this is so
I mean,
scary.
it is insurance, right? I mean, their
Yes.
job is to be risk averse. I can get that
But
from that
but
industry.
this is actually de-risking, and like that's the irony. Like, even they're so risk averse that de-risking is too risky for them. So, at any rate, it's creating opportunity if one has the patience. That's why you haven't heard from me in a while. It's taken a long time to get here.
Now
Okay,
you're allowed to talk.
now I'm allowed to talk. Yeah, we have my license is on. That's the Barbados flag. So we're very happily regulated and licensed. So great to be back, Scott. Happy to come on anytime, and keep on doing what
Absolutely.
you're
Thank
doing.
you, Stephen. Guys, give him a follow on X. It's right down in the description. And Stephen will speak very soon. Thank you.
Thanks.
All right, everyone. Obviously, we usually have Christopher Inks here on Wednesdays, but he is not present. He is sick today, and he usually takes a look at the Bitcoin charts for us. In his honor, I'll just take a quick look at the Bitcoin chart, which I think is the snooze fest of all time. And honestly, at this point, I don't think the chart has been telling us very much. I think we are being Trumpified, and we're just waiting to see what he does. But from a charting perspective, I mean, we do have kind of a clear symmetrical triangle forming. Whatever. We have a support and a resistance. If you want to choose a direction, you're looking for either a breakdown, I think, of this ascending line or a breakout of the descending line right above, and a lot of people pointing out this death cross coming from the 5200 MA, not guaranteed, but in my humble opinion, those are not tradable because they're a result of what's happened before and not what's going to happen in the future. I mean, in my mind here on the daily chart, we still have an intact bullish divergence when it was oversold. My bias still for Bitcoin, although it's not very popular, it's going to go up. And if it goes up tomorrow, or in 6 months, or in a year, I think it's going to go up. That's my bias, and I really believe it. That said, altcoins have just been a dumpster fire wrapped in a, just an absolute shit show. It's been horrible. And I think a lot of people, and myself included, were expecting that we would see this massive Q1 run from altcoins, as we have every 4 years at this point in the cycle when Bitcoin goes up and finally go sideways. And instead, what we've seen is 17 million tokens launched on Pump.fun and a bunch of degenerates pumping and dumping on each other, and with minimal interest in utility, which is a nice segue to the Wednesday sponsor we have here, which is Aptos, as you guys know, because you watch this show every Wednesday for many months, and you've seen Avery on here and all the amazing things that they're doing. But just to keep you updated, because utility does actually matter, Aptos stablecoin market cap has hit a new high of $1.05 billion. That's 680.3 million in USDT and 284.5 million in USDC. Obviously, this is a very good check on the health of the system or how much interest there is. Their DEX volume is up 53.5% in 1 month. Of course, they've had an incredible first quarter, 70 million active wallets, 2.5 billion in transactions, 1 billion in TVL and stablecoins, increased DEX volume, increased perp volume. And I was talking to Avery about this. You guys know Avery Ching, obviously, who's the CEO and founder after Mo left, became CEO. They've also, much like everyone else, been in Washington lobbying and working to make sure that we get that reasonable and smart regulation that we were discussing just before. I'm pretty hopeful that we're actually going to get the stablecoin legislation that we want and market structure beyond that. I think it's anyone's guess what's going to happen, but you guys should absolutely check out Aptos, everything that they're building. For those who don't remember, this is, they were the original team from Libra at Facebook, which then became Meta, and then Libra became DM. And then Mark Zuckerberg went in front of Congress to try to pitch private money in a stablecoin from Facebook and got absolutely eviscerated, and it was never going to happen, right? And then I think David Marcus, who was leading the team, went and started building on Lightning, who's the old PayPal guy. These guys they built Aptos, and I think everybody's pretty happy at this point. The irony is that I think once we get stablecoin legislation, we'll probably end up with Facebook money again, because I think we're going to get private stablecoins from pretty much every huge tech company in the world. Guys, that's all I got for you today. I'll be on Crypto Town Hall on Spaces at 10:15 a.m. Eastern. Standard Time. Check that out. And of course, be back tomorrow with Yago. That's all I got for you guys. Have a good one. Later.
That's dope.